Hello traders, welcome to another video on this channel. So in this video, I'll be showing you what to do and what not to do when you are on your charts. That means what to do and what not to do when you are marking out your structures, when you are choosing your inducement, or when you are choosing your POI, or when you are looking in for valid retracements, valid pullbacks. So let's take a look at the charts. Okay, as you can see, the market was in a bullish trend right here. This is a bullish order flow. So, what should you not do in this case? So, don't mark out each of these as a break of structure. Each of these highs here, you should not mark them out as a break of structure, because if you mark this as a break of structure, you'll get caught into many false moves. For example, if it happened that you mark this out here as a break of structure, I mean this move here as a break of structure, and you mark this out as your lower low, as your higher low, you would have seen that you would have hit your stop loss here. And if this happens now, you will change now from this lower low. You think that this is a change of characters, and you move uh, uh, an entry here to catch this move downwards. But you see that the price just rallies up and breaks above this. So what should you do? Should you do in this case? So when you're marking your valid uh, break of structure, what you should consider in mind is, for a break of structure to be valid, it must take out inducement, and for a higher high to be confirmed, it must take out inducement. For a lower low to also be confirmed, it must take out inducement. So in this case, it's a bullish market, so we are looking for a higher high to be confirmed and for a valid break of structure. So what should we look for in the market? So this is what we should look for. We see the market pushing up here. We see the market create this pullback, this valid pullback. So, and breaks above it. So this is not a break of structure yet. So what we wait for is for the market to pull below and take out this first pullback. The market needs, this one is very important, guys. So the market needs to pull back and take out this first pullback first. Once that happens, now we wait for the market to break out. We wait for the market to break out of this high here. Once the market has broken out, this is now a confirmed break of structure. So as you can see here, this will be a confirmed break of structure. I hope you understand what I'm saying. So this is a confirmed break of structure because this was our level of inducement here. This level of inducement here got taken out. This level of inducement here got taken out before this rally up. So after this level of inducement got taken out and this rally occurred pushing above this higher high, this was now our confirmed break of structure. This is a confirmed break of structure. So take so you should take note. There is a break of structure and there is a confirmed break of structure. The two are different. So as a trader, as an SNC trader, what you should be looking at in the market when trading are confirmed break of structure. This is very important, guys. I know why I'm insisting it over and over. It's very important because this is a trap that many people fall for. Many people fall for, and this is one of the key components that made me profitable in my trading journey. So now let's look at a confirmed high. So after this here, this is not our higher high. This is just another pullback. So after this, what we have here is market push above here. So before pushing above, this was our last pullback. Why is this a valid pullback? Is because our highest range candle here was this one. The highest candle in this range was this candle. You can see that it took out the high of this candle, and this next candle took out the low of that candle. So, and finally the high was taken out. So this was our last pullback. So when this pullback was taken out here. This high here was confirmed as a higher high. This higher high was not confirmed. If market was still here, this higher high would not have been confirmed. So for the very reason, that's why we never took this as a higher high. So this higher high was confirmed here. It was confirmed here when this took out this low. So after price took out this low, what we were eventually looking for was for a point of interest down here to be mitigated, then price push above this high. We're looking for, just give me a minute. So we're looking for something like this now, and for a valid break of structure to occur here, because if price would have broken out of this zone now, it would have been a valid break of structure. Why? Because this inducement was already taken out, but instead price failed to break out of this zone, creating what is known here as a change of characters. This is a change of characters. Why? Because this was our protected uh, 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 higher low. This was our protected higher low. Price never had any reason to push below this higher low, because it was a valid break of structure that caused this higher low, caused a valid break of structure. So now this is our change of characters at this level. This is our chalk at this level. So now after this chalk, what are we looking for in the market? So after this chalk, what we're looking for now is for inducement to be taken out before we can get a sell. So as you can see, our last level of inducement here should be here. This is our last level of inducement here. So now we are looking for something like this. If there is no POI, because this POI here has been mitigated by the wick of this candle. So there is no POI here. So this our level of inducement. We are looking for it to be taken out. Then price should give us some sort of confirmation here, uh like a single candlestick order block, a single candlestick order block. Then we can wait for a chop, and finally we sell, targeting this low. So you should take into consideration when marking out your break of structure. So this is what we are expecting on USD card. Of course, this was just an example to make you understand, but if you want to take a trade based on what I've just shown you, please look into a bigger scale of this chart, because this is just I just feed this on my screen to illustrate what I wanted to show you. Because you can for this you can apply it on indices, crypto, and even futures. You can apply it on any market you want. So let's look at why what you should do when choosing your correct point of interest. So in this other example, now we have another uptrend here. We have another uptrend here. So what we have here is we have this break of structure here. You have this break of structure right here. So why is this break of structure valid? We are going back to what I just said. It took out inducement. So this break of structure took out inducement. So now what to do when choosing you are right POI. If you are choosing a correct POI, what you should do is this. First, first of all, your break of structure should take out inducement. Inducement is very important. You should take out either inducement or liquidity. In this case, our level of, yes, I think, sorry, this was our level of inducement. This is our first pullback in this case. This is our first pullback. So after taking another pullback, we had after taking out this pullback, we had a very complex move down. and finally price took out our high right here. So when price took out this high and closed above it, our break of structure was now confirmed. So our break of structure was confirmed. So what we needed now is for price to take out the first inducement, which is here. In this case, the first inducement was here. That's our first inducement. We needed price to take it out. Needed price to take out the inducement first, then push down before we look for our point of interest. So after price took out this inducement, anything below this inducement now, we can consider it as our point of interest. So now, actually looking at this, what you can see is the last candle before that caused this move up was this candle. So does the candle meet our requirement for a demand or for an order block? Yes, actually it does. Why? It has this imbalance. It has this imbalance right from here up to here. And what does it also have? It also took out liquidity right here. If you can see that this other previous black candle was the wick was swept by this. So it took out liquidity. So now we can mark out our valid zone. That is our valid zone. So now when you mark out this zone now, what you are looking for is you are looking for a change of character or a single candle order block entry. So now, for you now to get into this, you need to move into a smaller time frame. If you are using the 4 hours or the daily time frame, you should use 15 minutes as your entry. If you are using 1 hour, you should use 5 minutes, and if you are using 15 minutes, you should use 1 minute for your entries. So now, after this, now if you move into a smaller time frame, you see that there was some sort of a change of characters here. Now, how should we enter our trades now? So we will enter our trades placing our stop loss right below this order block. So if you are in a smaller time frame, let's say 15 minutes, you can better refine this after a change of characters here. You refine it and you put your stop loss right below this candles the candle that created the change of characters. Then you target this high because we are sure that price will continue upward. We are sure that price will continue upward. So this is the high where we are going to target in this case. We target that high. So now after this, do we have a break of structure here? We have a break of structure. This candle closed above this zone. So now after this, where is our inducement? The first thing, let's take a look. Let's take a look. Our highest candle here. So this was our level of inducement right here before this break of structure. This was our level of inducement. Then when this level of inducement was cleared out by this, it was transferred here. So when price finally swept this, we started looking for an entry. We started looking for an entry after the inducement was taken out. So in this case, I think we never had an entry there, but price finally continued rallying up as you can see. So what to do and what not to do during your entries. Let's take a look at this example here. We'll break it down in a smaller time frame so that you should see how you could have entered properly into the trade. So what you can see here is price was moving down here. So after price tapped into this our point of interest, we had this. Let me just move that so that it should not disturb us. So after price tapped into our point of interest, we had this pullback here. So price finally broke above this pullback and continued up. So this was our level of change of characters right here. So after this change of characters, what happened is price then pull back, creating a flip entry here. And that is where we should have taken our trade and reduce our risks to here. So that's how you should have taken this trade, guys. So let me see. Okay, guys. Thank you all. That will be all for the video for today. Please, if you have not subscribed to this channel, please subscribe. Support us, please, guys. I'm doing my best, and to support me, you subscribe to the channel, you leave a like, you leave a comment on what I should cover next, on what I should improve on. Thank you so much. God bless you all. Have a profitable trading week.